Hello and welcome to BQ Prime. You're joining us on Bankable, the show where we talk to bankers as well as non-bank finance company CEOs to try and understand a little bit about what the financial services business is looking like, what are the challenges and what are the future opportunities for the sector. Today, we have another non-bank finance company CEO joining us. I have with me Mr. V.P. Nandakumar, the MD and CEO of Manappuram Finance. Mr. Nandakumar, welcome to this conversation. Firstly, I want to start with your point of view on the gold loan business as it stands in 2023. What is so special about the business today?
Okay. So, India has around 9,000 NBFCs. But if you take a top 50, 90% of the portfolio AEM is managed by these companies.
Right.
The other is not that significant. Again, if you look at the business models, many companies are doing gold loans, but hardly half a dozen are known as gold loan companies.
Correct.
So, Manappuram is the pioneer as far as gold loan is concerned. First gold loan NBFC in the country is Manappuram. So, we have brought several products, made several innovations in this sector. About gold loan per se, the opportunities are very high. The reason is, India, though not a producer of gold, it is one of the biggest custodian of family gold.
Right.
And the first initiative to understand about the family gold, because there is no clear trail about all these things. As we are the pioneer, we have undertaken that journey, which is with WGC and all other policymakers, because this is the first document we have created way back in 2007 when we thought of going for capital raising. So, at that point of time, we were the only NBFC as a gold loan. So, we engaged ICRA Management Services, IMAX, to study about the family gold. Then they have come out with a disclosure that, survey that, the family gold in the country can be anywhere between 18,000 to 25,000 tons. This is in 2007.
Okay.
Yeah. And these are with families, and majority of these gold are with middle class and lower middle class.
Okay.
Family gold, because traditionally they have been investing their surplus money in gold when the banking facilities were lacking in these areas. So that is a traditional investment what they are holding. So now we see every year an import to the tune of around 1,000 tons. So today it can be estimated anywhere between 35 to 50,000 tons. So running into a couple of $1 trillion. So when our GDP is below 4 trillion, this itself is valued around over 2 trillion. So it is very amazing. So, coming to the gold loan again, this was the domain of not banks or not even non-bank financial services, but of unincorporated bodies.
Correct.
Pawnbrokers and money lenders, whose number it is very hard to estimate even, maybe running into millions.
Okay.
Because every nook and corner, everywhere in the state, you can see some are within the control of State Money Lenders Act, which is, I would say, these are loosely controlled. And more than double of that is not coming to any controls, etc. So, many of the small time jewelers, they are also selling, etc. And the problem there is the usurious rates, etc.
Right.
And the practices are not transparent and fair. These are the problems. And in these area, in these locations, if you go through the unsecured lending, by the pawnbrokers, money lenders, etc., you can see usurious rates ranging from 200, 300%, to even 900%. That is the rate. Even when they have the gold, they don't use it because of yeah, religious factors, some beliefs, etc., etc. And we have innovated and brought out a big ad campaign using film celebrities. The message what we have brought out is, why keep gold idle? And monetize that through loans, because because of the sentiments, etc. They will not sell it. Thali, Mangal Sutra, or wedding ring, etc. These are the family gold. So why you borrow when you need money? You use this for as security for borrowing, and borrow at a lower rate from the formal sector, organized sector. So after that, other players also have come, but till then it was seen as a distress product, and using the celebrities, national as well as local celebrities. From that distress model, distress product model, we have brought that as we have changed. We could change to a great extent as a lifestyle product. Then many players entered. Now, but classified as gold loan companies still are very few in number compared to other NBFCs.
Yeah.
So even with all the lending we have in the country, as per the data available, the total jewelry used for mortgage of loan in comparison with the family gold is less than 10%.
Okay.
So that is opportunity.
Okay.
So now, the banks are there, cooperative institutions are there, NBFCs are there. If you ask me whether it is going for a stiff competition, it is there is competition, but we need to compete using customer friendly, bring out customer friendly products, using digital innovations, etc., etc. This is how we compete.
Okay. I'll want to break this conversation up a little bit. First, you started with the idea of a lot of gold stays with Indian families. I understand that you've changed your pitch from a distressed product to become a more lifestyle-oriented product. But traditionally, Indians are very attached to their gold. I mean, I know that it may work in your favor because chance of default therefore reduce. But just getting them to actually utilize the gold that they have, which they are probably saving up for their children's wedding or some whatever reason, whatever personal reasons that there might be driving this decision. Convincing people to part with a precious item that they are holding very close. How difficult or easy is it when it comes to the broader Indian context? Because I know in Kerala and certain parts of South India, this is common to use gold to access money, but it's not the same across the country, right?
Yeah, you are absolutely right. So one thing, it is seen as a distress product, which even the poorest of poor doesn't want to appear before the society.
Correct.
The second is they are attaching some godly things to this. Yeah, some see this as Lakshmi, etc., which they don't want to use it for pledging, etc., etc. Now changing that was not that easy. That is why in 2007, 8, etc., etc., we came out with a very big branding about, not about, the focus was not about Manappuram, but as the product,
Gold loans.
a product gold loan, as we want to make that as a lifestyle product, as I have mentioned earlier. So this has helped the other lenders also who have subsequently entered. So the governments have come with many schemes to monetize this gold, because this is very important for the government, for the economy. But they failed, because when they announced gold deposit schemes, if
Yeah.
you look at, uh, hardly any family gold has come. What has come to the for deposit is the temple gold.
Hmm.
Family gold, the reason is these will get melted, and when it is returned, this is not in the same form.
Correct.
Yeah. So there is plenty of hesitation there. So for attracting family gold, this was the gold deposit schemes were not an effective tools. But temple gold, at least, yeah, the system would garner. To that extent, we can say it was a good step.
So I want to pick the next question with regard to the competition aspect. Now, you said that there are banks, non-bank finance companies. We've also seen some fintechs enter the gold loan space. What are they lacking that you already have?
See, the ordinary customer in the sense that our target audience, which are mostly in the lower end of the pyramid,
Hmm.
they pledge for a shorter period, and for meeting some requirements,
Yeah.
but it will not end there.
Hmm.
Again, the requirements will recur. Then again come for after a gap of 10 days, 20 days, 2
Yeah.
months, 3 months,
Yeah.
etc.
Yeah.
Seasonal requirements like agriculture season, all the children's academic reopening season, etc. etc. They come. So 80% of the customers are repeat customers.
Hmm.
So the non-banks, their borrowing cost is high,
Yeah.
whereas banks' borrowing cost is yeah, like bigger banks. It is for 1/4 of that of non-banks,
NBFCs. Yeah.
NBFC.
Yeah. Yeah.
So our rates will be naturally high
Correct.
compared to a bank.
Correct.
So the attraction as far as NBFC is concerned, the turnaround time. As these are repeat customers, the KYC requirements, regulatory requirements, all the requirements are already there in the system. So with the use of technology
Yeah.
and use of yeah, innovation in this field, particularly bringing products like gold loan can be transacted out the clock from anywhere, etc., online. We have to create our own niche. Our niche is, our customer can, 80% of our repeat customers can leave the counter for pledging
Hmm.
in 10 to 15 minutes time maximum. Because all the KYC, everything is there, is a number is this, code is there, everything. And many of the customers send SMS. Yeah, I'm coming with the 10 grams ornament, 20 grams ornament, or 30 grams ornament. Yeah, I want 30,000, 50,000, etc. He knows at the rate. Then our system will answer what will be available. And if it is okay, immediately for a new pledge, etc., he can leave in 5 minutes when he comes. So this is the thing. Going to a banking system, the challenge there is, yeah, they start late, whereas we start at 8:30. They start at 10
Right. They start
o'clock,
about, yeah. Yeah.
and their processes are very time consuming.
Got it.
So these customers are mostly, I told about, many of them are more at the bottom of the pyramid. They are wage earners. So if the customer has to wait up to 11 o'clock, in most cases, he loses that day's wage.
Hmm.
So taking into account of the day's wage for pledge as well as redemption, his opportunity loss is higher going to a banking system because of the TAT.
Correct.
And another thing, these are all small ticket loans. See, for say 1 month, 2 month, 3 months, etc. So the time consumed by the bank employee,
Yeah.
his cost,
Yeah.
cost of the system as a whole. For such a small loan for a shorter period doesn't work out the economics.
Hmm.
So this is where the operational difference between a bank and non-bank. So To your question about competition is there. Opportunities are also there. But how do we overcome or survive, come out successfully, is through innovative products and how to make the life of the consumer easy.
Okay. In terms of the existing ecosystem that you're working in, right? There's a lot of focus on retail loans, and for the point that you're trying to make, which is don't let your gold sit idle. If you need money, you can
Yeah.
use that gold to.
Yeah.
Now banks and NBFCs are going after people to give them personal loans, so they don't even need to keep the gold. They can just go to a bank and get their website or even a mobile app today, fill in their details, and they get the money into their bank account. Does that pose a competition? The rise in unsecured assets.
In a society where the need is multifold, the requirement for cash is also increasing,
Yeah.
and it is gradually becoming a consumer economy. So, in such a situation, the need cannot be satisfied.
Yeah.
So, yes, personal loans are available, but these doesn't meet the actual family need.
Okay.
Yeah. So, if they want 5 lakhs, the unsecured such loans for these people may be limited to around 1 lakh. Where do they get? So this is where the scope of gold loan. And again, look at how many people in the country has the required bureau score. Not even 10%. What about the other 90% who have no bureau score or low bureau score? And they also have the necessity. So this is where the service of a gold loan company, where there is no question on bureau score, no question on cash flow. See, when we assess the cash flow as a lender, many a time we rely on documents. Even without documents also, when through some assessment model also we lend.
Yeah.
But at least there should be something. But many of these customers would have the cash flow,
Yeah.
but unable to convince the lender. This is where the customer selection, where the personal loan as well as gold loan differs.
One thing that we are seeing in the current economic setup is that there's a reduction in the household savings. Recent data points out that we are at about a 47-year low on financial household savings. I'm not saying other, there will be other aspects of savings as well. But financial household savings are down to about a 50-year low, 47, 50-year low. Do you feel, as a lender who's been in the system for a long period of time, do you feel that the leverage in the system has gone up significantly?
Yeah. The leverage in the system has gone up. There is an increase in the consumption. The economy is coming out of that sort of conservatism to consumer economy, as I mentioned earlier. So, the earlier concept of saving, and part of the saving, part of that money is used for consumption, etc. So that culture is changing. So EMIs are become popular, but still, what we could see, the asset quality of the BFSI sector has improved only. Even post-COVID scenario is that. But there are signals about the asset quality going bad, etc., in some of the sectors, etc., and regulator is continuously cautioning.
Yeah.
So, with the more cautions and controls coming in, regulators entering that scenario, etc., etc., this will be controlled.
Yeah.
So, even now there are many controls, But with the use of even regulator using the tools like artificial intelligence, generative AI, etc., etc., the controls would come. Because now, even though the asset quality remains high,
Yeah.
there is a general concern about possible decline in asset quality. So, I think the borrowing through multiple channels will be controlled. Now, there is some control through bureaus, using bureaus. But the problem is the data and getting entered in the bureaus are not online. So, it takes us time. By that time, the credit decisions would have taken.
Yeah. Yeah. So the speed is becoming a bit of
Yeah,
a
yeah, yeah,
challenge
yeah.
in maintaining quality.
Right.
Okay. I also want to touch upon Manappuram itself. Now, as a company, you've been through the COVID period. After that, like most other NBFCs, you had a bit of a misstep on the on the asset quality front. It obviously has improved significantly now, and now your portfolio is looking very good. In fact, the last quarter numbers were also looking really strong for you. But what was COVID, those 2.5 years like for you, and how did you sort of navigate your business through that?
Our gold loan business was not affected by COVID. Our MFI also, it was also not affected. Vehicles in some of the segments were affected because of the school buses, the transportation buses, etc. But the products like car loans, used car, two-wheeler loans were not that affected. Now we are coming out. Affordable housing also, that segment, some this thing was there. These assets which were part of the assets which was expected to turn toxic has come out.
Okay.
Yeah. But one sector that was affected is microfinance. So, that sector also, we are not a reported loss in any quarter that year also, but the profitability has gone to, yeah. Now, the sector as a whole, the regulator also has done several changes. Yeah, from the judiciary also, some decisions of the judiciary has become very favorable for the industry.
Okay.
One, the net interest margin cap has been removed. That there was a judiciary a case was in the apex court.
Yeah.
About state's ability to control, regulate,
Yes. I remember this.
NBFCs as a whole, MFIs, etc., etc. The state's the contention has been quashed by the apex court. So in these sectors, it has come out. So the sector has been earlier. It had a very big problem in pricing the NIM cap at this thing. The problem there is it is very OPEX intensive business. More people are required, going to people, etc., etc. So, and the cyclical nature of the risks involved. So, and now the industry feels like NIM should be improved to around 12-13%.
Yeah.
So that we create some internal reserves in order to meet up with the challenges because of the cyclical risks involved. So it has come out. So to the question, I would answer like this. Because of the during demonetization as well as this pandemic, there was a hit on that business, which was an unsecured business, and the people who were hit the most were the consumers there. So the industry has come out, and we have also come out very successfully.
When I asked you about how you navigate, I wanted to understand from you, because a lot of your business is actually dealing with the customer themselves, right? Directly, one-on-one. So when during the pandemic for 6 to 8 months, everything was shut. I understand that in Kerala, the shutdown was even longer than a lot of other places. how do you deal in a business that is so people-centric
Yeah.
during a pandemic?
So, two, three risk mitigations we have. One, in geographic presence, all our businesses are spread across the country.
Yes.
You mentioned about Kerala, where we are headquartered. So there, our consolidated, amongst consolidated business, the share of Kerala is only 5%.
Okay.
The second thing, yeah, during this time, what helped us, for the delivery of services to the consumer is technology. Even before that, luckily we have introduced online gold loan schemes, etc., etc. So during those days, when the branch counters were closed, bank counters were closed, etc., etc., so they could transact. And one good thing which was very helpful to them, those days the gold price has gone up because of the uncertainty. Global gold
Correct.
price has gone up.
Correct.
So in our online gold loan scheme, the loan to value 75% because the value has increased. The 75% of that has also gone
Also
up.
gone up.
So
Yeah.
this has really helped them, the consumer. So for the company also, because of the growth then, the sustainability, even the bottom line has not been affected.
Okay.
Yeah.
So that uncertainty that was there during COVID is now sort of back. We've had geopolitical tensions now. Fresh geopolitical tensions are
Yeah, yeah.
rising. Therefore, oil prices are also shooting up. In general, there is that fear that things that were looking a little better are now again going to go into trouble territory. In these times with the volatility in gold prices, how much of your business, I mean, I understand your business is not just gold, you also have a sizable non-gold portfolio, but how much of that gold business gets impacted because of these uncertainties and things basically which are out of your control? You can't manage geopolitical tensions.
Yeah. These geopolitical tensions affect everybody. So this is very unfortunate.
Yeah.
Yeah, one after another, this is impacting the society, and this is a cause of concern for everybody. But as far as gold loan is concerned, because of the gold price, when it increases, the loan also is seen growing. Because naturally the lenders in other sectors will become more risk averse.
Correct.
So the products like personal loans, the lenders will be very unwary about that. So this is an opportunity for gold.
When you're talking about the non-gold loan business, I want to touch upon that. You talked about microfinance and what happened there during the pandemic. Now things are sort of looking significantly better. You've also got your vehicle financing, affordable housing. I want to understand, as a lender, is the current market a little more crowded because of the push on retail amongst banks and NBFCs, or do you feel that there's enough for you to build a business as well?
Yeah. So our non-gold, non-MFI portfolio is also becoming very large. So this year, I feel like, judging from the growth over the past few months,
Yeah.
and the trend continues, it can cross more than 7,500 crores. So it's a sizable one. So where we rely for growth is our own customer base. Even our diversification strategy is based on that.
Okay.
Why we entered into affordable housing? Our gold loan customers are in need of home improvement or purchasing a small house, where the ticket size is around from 5 to 15 lakhs.
Okay.
So he used to ask, even when we were a pure gold lender, can you grant us a home loan? These are from the remote places in the villages. That's why we thought, we should not drive him away. Let us. Similarly, he started asking for two-wheeler loans. Or the small used car where the ticket size is average 3 lakhs, etc., etc. Why should we drive him away? Even commercial vehicle where the average ticket size is around 8 lakhs. So these are all, the diversification is rather need based, as far as based on the need of our customer to protect our customer, and rather than the product concept based on some product from the customer, value from the customer, and the service which are mutually beneficial. That is the reason for diversification. Then we thought, we have many of our customers are from the bottom of the pyramid. They want unsecured loans. Then we thought, why can't we enter into microfinance also, where the cross-selling opportunities are also good. This is how we diversified our business. And people look at your gold loan is safe. Why should you enter into other field? It's not like that. Even gold loans have its own benefits and disadvantages. Disadvantages, like if it is, after all, it is against metal. Metal are up for cyclical price changes. So when the price goes down beyond a certain percentage, that risk is there. So always it is better not to have all the eggs in one basket. Spread it, but emphasis is more on secured business.
Okay. One question that I had was with regard to the way investors are currently seeing your company and the stock that is there already trading in the market. About a month ago, we saw one large foreign investor sell about 10%, 9.9% stake in Manappuram. They, of course, exited with a nice profit on their initial investment. But I want to understand, in a market where there are a lot of financial services names where people can bet their money on, why should somebody come to Manappuram?
So, one, risk management through diversified products. Risk management through diversification in geography, spreading across geographies. Third, yes, if one business is muted for some time for growth because of cyclical changes, etc., etc., the other business has opportunity. So, cross-selling opportunity. So, what we intend to have, one, customer satisfaction, retaining customers. With that, what we intend to achieve is a compounded growth rate, consolidated growth rate of 20% and ROE of 20%. So, this can be achieved with lesser risks because of the diversifications I have already told. We are able to ensure a CAGR of 20% with an ROE of 20%, over 20%.
Is there any other business that you want to diversify into apart from what you're already in?
Yeah, we are into insurance broking. Gradually, depending on the regulatory approvals, we may enter into insurance sector also.
Okay.
Yeah.
Life, is that something that you're looking at? Okay. You tied up with JCB recently, JBC, right?
JCB.
So I'm just keen on understanding this co-lending sort of approach. I mean, you're as you said, a middle layer NBFC, but a lot of smaller NBFCs are also tying up with banks to do the co-lending sort of an agreement. How does that really address the challenge of reaching last mile?
For the banks, not for NBFCs.
Not for you.
So here this is the advantages and disadvantages of co-lending. For a player like us, where our equity is not effectively leveraged. Leverage is, compared to the industry, our leverage is low.
Okay.
Yeah, there is good potential there to leverage that. Again, availability of debt. Being a AA rated company, debt is also available as per the requirement.
Yes.
And we have diversified the debt side also, liability also. In the past, we have raised debt through overseas bonds and borrowing from mutual funds and insurance through NCDs, etc., etc. Because of that availability of debt and equity adequately, there is no compulsion on that front. But at the same time, going forward, the quality is a big opportunity. It's good, yeah, and banks are very keen to do that, to reach last mile, because that helps them in managing their cost.
Yeah.
So, we are in discussion with some of the largest bankers, and we are working out something so that at least some portion of our AEM should be through co-lending, because what we intend is, rather than any financial compulsions now, uh, it becomes a part of strategy in diversifying the liability.
Yeah, exactly. Because the cost of funds
Yeah,
for you
yeah,
also works out to
yeah,
be lower that
yeah.
way. Makes sense. Yeah, so last couple of questions, but I want to touch on the liability question a little bit. So the system in general is dealing with a higher cost of fund at this point in time, at least since last year, since the RBI started hiking rates. Um, to your mind, is it now done as far as the tightening cycle is concerned, or are you still in the market facing higher rates? Because in general, there's a slight tightness in liquidity.
Yeah. Now, if you read between the lines of last MPC outcome, the RBI has not talked about reversing that.
Yes.
The pause, they said, yeah, has been given with a wait and watch policy.
Yeah.
And after that only, the war in the West Asia has erupted. So because of the uncertainty about the situation, there
Yeah.
is yeah, a cloud of uncertainty. But I feel like, yeah, the situation will not go that worse. It will be controlled, etc., etc. But the chances of the policy rates going down, it cannot be expected, and going up also cannot be expected in our country, because the core inflation
Yeah.
and even food inflation, because we had the worry about the monsoon, etc., etc.
Yeah.
But
Yeah.
yeah, even though there is deficiency in some part. Uh, so I think agri production would meet our requirements, etc., etc. So I think the chances are we can expect the rates to be without much change.
Okay. Lastly, I want to tackle this question, which is there's a lot of amongst the banks and the NBFC segment in general, there is this hope of like a lot of growth is coming. You know, we're entering the cycle. People will earn a better income, and therefore their financing needs will go up, and that gives you an opportunity to grow your book as well. But to your mind, what is the biggest opportunity that that you're seeing at this point in time, and what is the one challenge that you are definitely looking out for, just to be cautious?
Opportunity, the biggest opportunity I see is the secured MSME business, where the ticket size is up to 15 lakhs.
Okay.
That is a secured business. Then when the income level of the poor people grows, this sector is positively impacted. It is where I see a lot of opportunities, and where I want to have the yeah, more risk management is in unsecured business, like microfinance. So we are very cautious there also. Our maximum lending rate there is also, compared to the industry, is lower. We have kept it lower because we see increasing that, hiking that to the market. What is seen in the market is little worrisome. So it is where we are very cautious. We want to be very careful in lending in unsecured business.
Okay. Okay. So that's something that you will grow, but not
Yeah,
fast.
we will grow, but at the same time, it will be a very cautious growth.
All right, Mr. Nandakumar.
Yeah.
Thank you so much for your
Thank
time.
you.
Pleasure talking to you, sir.
Thank you. Thank you so much.